Welcome to Market Brief After Hours. We're wrapping up a highly active Monday, and what a way to start the trading week. Following the U.S. Independence Day holiday, Wall Street came back with plenty of energy, pushing major indices to impressive heights. If you've been watching the markets, you know we've seen some incredible milestones lately, but today brought something truly historic for the blue chip index.
It absolutely did. The headline story of the day is the Dow Jones Industrial Average securing its first ever close above the 53,000 mark. The Dow climbed 156 points, or 0.29%, to finish at a record close of 53,056. It even notched an intraday record during the session. But the Dow wasn't acting alone. The S&P 500 gained 0.72% to end the day at 7,537, while the Nasdaq Composite led the charge, advancing 1.12% to close at 26,121. This positive momentum really builds on the strong performance we saw last week.
Right, because last week was already quite strong, with the Dow climbing close to 2%, the S&P 500 up 1.8%, and the Nasdaq up 2.1%. What's particularly interesting is how technology stocks, especially semiconductors, staged a massive comeback today. They had a bit of a rough patch last week, didn't they?
They did. Last week we saw investors paring back their exposure to chip makers and rotating into other sectors. The VanEck Semiconductor ETF, for example, shed 3.2% last week, marking its second consecutive weekly loss. But let's keep things in perspective. That same fund closed out the first half of the year up more than 80%. Today, it rebounded by about 2%. We saw broad gains across the tech sector. The State Street Technology Select Sector SPDR ETF rose almost 2%, driven by a massive 7% surge in Western Digital and a 2.8% jump in Teradyne. Marvell Technology also rose over 1%, and Oracle gained 2.5%.
It seems like the artificial intelligence trade is experiencing a bit of an ebb and flow. Some market strategists are pointing out that because expectations are so high, we might not see the same explosive upside in the second half of the year as we did in the first. How are analysts viewing the path forward for these AI leaders?
The consensus is that it's going to be a battle of fundamentals. If these companies can confirm that their earnings growth is robust and reaffirm their positive outlooks, they can certainly continue to melt higher. But we shouldn't expect tech or any other single sector to carry the torch entirely on its own for the rest of the year. The broader picture, economic growth, the trajectory of interest rates, and actual corporate earnings will ultimately dictate the market's direction. Right now, though, the overall backdrop remains quite supportive.
Speaking of individual corporate moves, we had some major news on the employment front from one of the world's largest tech giants, while another hardware maker got a high-profile boost.
Yes, Microsoft was a notable decliner today, falling nearly 1% after announcing plans to cut 4,800 jobs, which represents about 2.1% of its global workforce. On the flip side, Dell Technologies had an outstanding session, climbing more than 4%. That surge came after President Donald Trump promoted the company's computers directly from the White House after he rang the opening bell.
That's a massive swing for Dell, and it wasn't the only stock making big waves today. We saw some significant action in cybersecurity and a few dramatic moves among mid-cap companies. Can you run us through some of the standout market movers?
Cybersecurity was a major bright spot. Okta surged over 5%, Fortinet climbed more than 3%, and we saw gains of over 2% for CrowdStrike, Palo Alto Networks, Zscaler, and Cloudflare. Outside of tech, AXT saw its shares soar almost 12% after announcing that its subsidiary signed a master development and supply agreement with Coherent, which will see AXT boosting its manufacturing capacity in Beijing through 2028.
Not all the news was positive, though. We saw some pretty steep drops elsewhere.
We did. Solstice Advanced Materials, which spun off from Honeywell last year, plunged about 15% on reports that it's in merger talks with Element Solutions. If that deal goes through, it could create a $27 billion specialty chemical giant, but investors clearly had some near-term reservations. We also saw Zim Integrated Shipping Services slide over 7% following reports that Israeli Prime Minister Netanyahu stated the proposed sale of the company is not on the agenda. Finally, Orive Automotive led the decliners in the S&P 500, dropping more than 6% after reports surfaced that the company is interested in acquiring the auto parts segment of Genuine Parts Company.
Fascinating dynamics play out when these corporate rumors and geopolitical factors collide. We're going to take a very quick break. Stay with us. Welcome back to Market Brief After Hours. Let's expand our horizon now and look at how global markets performed today. European markets seem to have a much more cautious tone compared to the optimism we saw in the US. What was driving that sentiment?
European stocks closed mostly lower on Monday. Investors were busy digesting regional economic data, though the downside was somewhat limited by easing geopolitical concerns and expectations that major central banks, including the Federal Reserve, will hold interest rates steady for now. The Pan-European Stoxx 600 index slipped 0.35%. Looking at individual countries, the UK's FTSE 100 fell 0.26%, France's CAC 40 shed 0.47%, and Switzerland's SMI dropped 0.85%. Germany's DAX was the outlier, managed a modest gain of 0.15%.
There was also quite a bit of economic data out of Europe, particularly regarding inflation and manufacturing. What do those numbers tell us?
In the Eurozone, producer prices rose 0.2% month-over-month in May, which was right in line with expectations. Energy prices actually fell by 1%, reflecting oil prices returning to pre-war levels. Real retail sales in the Eurozone rebounded slightly, rising 0.2% in May. Meanwhile, German manufacturing orders showed tentative signs of stabilizing, jumping 1.9% in May, which was much better than the 0.7% increase economists had forecast. Over in Switzerland, the unadjusted unemployment rate ticked down slightly to 2.9% in June, beating expectations of 3.0%. However, the UK's construction sector showed some weakness, with the S&P Global UK Construction PMI coming in at 38.4 in June, below expectations of 40, though business sentiment did hit its highest level since March.
Turning our attention to Asia, the markets there also seem to be trading with a degree of caution ahead of some critical corporate earnings. How did the major Asian indices wrap up?
It was a mixed bag. In China, the Shanghai Composite finished marginally lower at 4,041 after a choppy session, while Hong Kong's Hang Seng Index jumped 1.14%. In Japan, the yen remains pinned near a 40-year low against the dollar, which is keeping investors on high alert for potential currency intervention. The Nikkei average finished marginally lower at 69,737, but the broader Topix index rose 0.92%, marking its sixth straight session of gains. We saw strong moves in Japanese auto and machinery stocks, with Toyota climbing 3.4% and Mitsubishi Heavy Industries skyrocketing 8.4%.
And what about South Korea and Australia? There was some historic structural news out of Seoul today.
Yes, South Korea officially launched its historic 24-hour onshore spot $1 trading system, which is a major step toward liberalizing its financial markets. Despite that, the Kospi index fell 0.46% to close at 8,051 due to heavy foreign and institutional selling. SK Hynix fell 3.4% ahead of its $29 billion ADR listing, though Samsung Electronics rose 2.8% on strong semiconductor profit expectations. Down under, Australia's S&P ASX 200 slipped 0.15% to 9,037, even as the country's monthly inflation gauge fell 0.4% in June. Across the Tasman Sea, New Zealand's S&P NZX 50 rallied 1.06% to hit a record high.
Let's shift our focus to the foreign exchange market, where we've seen some highly technical moves. I want to make sure we cover the key currency pairs and their relationship with major moving averages, because those technical indicators are telling a very clear story right now. Let's start with the euro.
The Euro-USD pair is attempting to stabilize after a very steep sell-off. It closed today at 1.1441, up a tiny 0.05%, trading in a very tight range. But technically, the medium to longer-term profile remains heavily bearish. To give you an idea of how much ground the euro has lost, the price is currently sitting significantly below its major moving averages. The 50-day simple moving average is way up at 1.1583. The 100-day SMA is at 1.1619, and the 200-day SMA sits at 1.1652. Immediate support is at the session low of 1.1409, and if it breaks below that, we could see a test of the recent swing low near 1.1350.
The British pound, on the other hand, seems to be showing a lot more strength.
Absolutely. GBP USD surged higher to close at 1.3391, up 0.28%, near the top of its daily range. It's currently in a sharp V-shaped recovery and is pressing directly against a massive resistance cluster. It is trading just below its 200-day SMA of 1.3399, its 50-day SMA of 1.3406, and its 100-day SMA of 1.3408. These three moving averages are tightly converging right overhead, making this a crucial directional test for the pound. If it can break through this barrier, the bullish momentum could really accelerate.
Let's also touch on commodities because we saw some massive moves in agriculture today, while precious metals and energy had their own technical stories.
Agriculture was wild today. Benchmark Chicago corn and soybean futures both jumped nearly 4% to hit one-month highs. December corn rose 3.6% to $4.57.5 per bushel, and November soybeans surged 3.9% to $11.92.5. This was driven by severe weather worries in the U.S. Midwest, where heavy rains flooded fields, and fears of record heat waves damaging crops in Europe. There's also renewed speculation about Chinese demand.
And in precious metals, did we see the same kind of momentum?
Not quite. Gold did close higher at $4,163, up 0.99%, but it formed a highly indecisive candle, failing to hold on to its early intraday highs of $4,023. Technically, gold remains in a dominant downtrend, sitting well below its 50-day SMA of $4,415, its 200-day SMA of $4,463, and its 100-day SMA of $4,649. Silver showed a similar pattern of exhaustion, closing at $62.06, up 1.78%, but well below its 200-day SMA of $69.05 and its 50-day SMA of $71.05.
Finally, oil prices were relatively flat today, even with some major supply developments.
Yes, Brent crude closed down 14 cents at $71.99 a barrel, while WTI settled down 13 cents at $68.55. Prices have returned to pre-Iran war levels, largely because Saudi Arabia implemented its biggest official selling price cut to Asia since 2003, setting its flagship Arab Light at $1.50 below the Oman-Dubai average. Additionally, the UAE boosted its output to near-record highs above 3.8 million barrels per day in June, after leaving OPEC to escape production caps.
Well, it's clear that between corporate earnings, macroeconomic data, and shifting technical levels, there is no shortage of action for investors to digest. Looking ahead to the rest of the week, all eyes will be on Wednesday's FOMC meeting minutes. This will be the first set of minutes under the leadership of the new Federal Reserve Chairman, Kevin Warsh, and market participants will be dissecting every word to understand his policy approach. That brings us to the end of today's episode. If you find this useful, please follow Market Brief After Hours.